Hey, very good morning, everyone. Charles here, Frgnt Daily Chart Analysis, Friday, 24th July 2026, and the time, blimey, it is approaching 25 minutes to 11 local in Milan. Very good morning to you all. I've done a breakdown this morning to those that like to pay attention to what I have to say. A very good breakdown, I do believe. And really, I'm just going to share a couple snippets of that breakdown with you all here on TradingView, just really to highlight that I appreciate we're all day traders, but day traders, it often comes with a couple of negative connotations there. We then start to believe that as a day trader, we have to trade on a daily basis. And what we have to remember is that we are investors and we are long term investors, but we have the opportunity to make those long term investments short term, hence by the fact that we go down through the time frames, we look for those lower time frame breaks of structure, etc., etc. However, as an investor, we still must revert to the fact that if we're going to be using our higher time frame analysis to come to those conclusions on the lower time frames, if those higher time frame points of interest are not really aligning, or we're seeing some conflict or even some confrontation to in terms of what we're looking to do, and it's fine to say, well, for the day, based on my higher time frame analysis, my short-term investments are going to probably take a little bit of a delay, and perhaps I'll wait for my higher time frame points of interest to align. Therefore, my lower time frame then supports my higher time frame points of interest and my bias, and then I'll make my investment. So with that said, I'll take a bit of a dive into what was discussed this morning. Not as in depth, because that definitely would not be fair. However, what I'm looking at as the DXY, we can see on the DXY top right hand chart, that is the weekly time frame. And I can see over the last couple of weeks, we'll call it a month, the weekly time frame hasn't really been doing much in terms of weekly candle closures. We're just kind of moving stagnant to the right, of course, as those candles start to print, and we're not really making any further highs, and we're no longer making any further lows. So therefore, if we go to the lower time frames, we'll look to get that information on more of a direct image, and we can see also on the daily time frame that we're doing pretty much the same. There are no clear highs in the market, certainly no clear lows aside from this area just here, and therefore I believe that is the range confirmed perhaps on the DXY. With that said, we recognize that we can trade ranges, particularly that the fact we're using the DXY for confluence. So we're not looking to potentially trade it. We will still mark the DXY up in relation to how I would look to trade it if I was going to. It's something that I've done previously. There is no difference in my strategy to applying the concepts to the index as there are to applying it to crypto and also to foreign exchange. So nevertheless, when we start to refine those areas down on the daily time frame, what I'm looking to understand is, well, after a high that has definitely been created on that weekly time frame, I'm expecting a higher low to be created. So I understand straight away that if I'm looking to short the DXY, I believe that could be a short-term play based on the fact that my higher time frame is telling me, well, we are bullish. It's as simple as that. So when I'm looking to refine those areas down to look for those turnaround points, where could the DXY potentially react from in a bearish manner, which could be a short-term type of investment, and where could that be going down to? I am looking for my order blocks on the daily time frame. So as a result of one bearish engulfing candle that we can see just here as I highlight that, we then have a daily order block. That daily order block is nicely at the top of the daily range. So we then have two confluences that we're looking for, reasons to potentially look to short the DXY from a particular point of interest. So we have, at the moment in time, we haven't broken above that daily order block. We're still using that daily order block. Therefore, what I need to do is continue to refine those areas down to potentially look for order blocks that are not mitigated within that higher time frame point of interest. That will then allow me to take let's say a short position on the DXY, or use the short confluence on the DXY to perhaps give way to a long position on a cross pair such as EUG and AU, my favorite pairs that I trade. Or we could then use that confluence to take a short position, let's say on US dollar CAD. So it's all making sense at the moment as to reasons why. So when I look to refine that daily order block down, we are here 4-hour time frame. So the caveat to that is there isn't a 4-hour order block available anymore. So what I can see is at the top of the range, we were having this 4-hour order block right up at the highs. That has unfortunately been broken up towards the upside. So, in terms of my investment play, so I can understand we have made a high on the weekly time frame. We're looking to understand a potential turnaround point, let's say towards the downside, since we are at the highs of the highs, and at the highs of the highs, I'm expecting price to pull back, create that higher low for the higher high continuation. So I'm looking for supporting evidence on those lower time frames. I did have that supporting evidence, let's say yesterday, as I said, we had this 4-hour order block that was being respected, and then we came into that 4-hour order block. We then made a further low from that. If we were to say we've broken out of the range perhaps, then after a low, what are we expecting? A lower high. So all the more reason for price to want to pull back up into that area, which we are now looking potentially for a reaction from. However, of late, as an intraday perspective trader, what we can see in the immediacy is we are making high highs and lows, high highs and lows, high highs and lows, and on the way up we are leaving order blocks behind by way of 4-hour time frame. So that's giving me my more intricate term of target if I am going to look to, let's say, short the DXY, because looking at the performance of that 4-hour 50 MA, previously I wasn't going to be using that as confluence, because in the midst of a range, what you will see is the EMA on the particular time frame starting to go through the central point of price action. Of course, with the higher time frames, we're not going to get that, because the indicator of the EMA on the daily and the weekly is a very delayed indicator. Therefore, it's going to be very unlikely to see price action going through the range on a higher time frame by way of the EMA. So if I'm looking to short at the moment, I recognize that my targets are going to be based initially on the 4-hour time frame, because of the performance of the 4-hour 50 MA, where price is broken up and it's respecting. As it's respecting, it's leaving order blocks behind as price starts to step up and make those higher highs and higher lows. So that is concrete for me. Now, the fact that also we've made a new high on the 4-hour is giving me more confidence to then look for a potential higher low. So straight away, I now understand that if I hadn't understood it already, I now fully understand that my short position, let's say on the DXY, is going to be nothing more than a pullback. So I cannot hang my hat and say, well, if I short the DXY, i.e. if I'm looking to long GU, EU and AU, I'm going to be in that move for a long period of time. So here, what would be the better word to describe it? Here sets the standard for my expectations. I'm not expecting GU and EU, let's say for example, to move to the absolute highs, because I don't have the expectation at the moment for the DXY to move to the absolute lows. It would be unfair to say that, because the DXY is the catalyst. So I've got two trails of thought. Of course, if I am in that daily range, of course, I could understand, or I could look to seek for price to move all the way down to these lows. But because of late, that the 4-hour time frame is now broken above an order block that I would be considering, let's say, to get a great reaction to the downside from, I'm no longer trading from a refined area on the higher time frame. All I'm looking to do is manipulate the pullback on the DXY, which should, based on the distance where price action is currently on the DXY to my current targets, where I'd be looking to, let's say, long the DXY from, it is enough range for me to probably get to at least a 1 to 3, or at least expect a reaction from my long position on the cross pairs and move towards break even and protect my capital. So that's what I'm looking at the moment. So when I then look to refine, let's say, price action down, so it wouldn't be a particular area on the chart anymore, because I'm not using a 4-hour order book. There isn't one available anymore, so I cannot fabricate one. I now need to rely upon my lower time frame price action. So as a result of yesterday's bullish price action on the DXY, which we saw the melt on EU, GU and AU, we have this extremely long leg extension where I must admit it's difficult to identify price action in its most basic format. What I mean by that is clear higher highs and lows, high highs and lows, high highs and lows, etc., etc. You've heard it all before, much like what we can see on the 4-hour time frame. So if the 4-hour can trend in such a beautiful way, so can the 15 minutes. So when I'm seeing the 15-minute do something like that, straight away, I recognize it's going to be down to interpretation and my own discretion, of which where I see a break of structure, or first and foremost, where I see a structure point that I'd want to see broken, then in order for me to await a pullback, to then take a short position and then be trading in line with the most recent intraday price action, which is now 15-minute bearish. So I understand higher time frame is against a 15-minute bearish move, but based on my confluences and understanding of the higher time frames, after a higher high, expect a higher low on the weekly and on the daily, then I'm also expecting the same thing on the 4 hour. So I'm pretty confident that we can see a slight pullback on the DXY. But to solidify that thought process, I've given myself two structure points. So I recognize if I want to take this position aggressively, I need to have some type of structure point broken. So I've got two there on the chart, and it may not make too much sense on the 15, but certainly when you go to the 5-minute and the 1-minute time frame, you can see that these structure points align very nicely indeed on those time frames. So in terms of my illustrations on the chart, you can see my first point of interest would be this structure point here. If we do get a break of that area, pull back into those highs, hopefully there would have been a lower time frame order block up at those highs. But what I can see at the moment is, as a result of this move that created the break, what do we have? We have a nice 15-minute order block just waiting there up at the highs. To be a little bit more conservative, what I should be doing is saying, well, this is a clear session high in the market where I would expect price to want to gravitate back towards before looking for a short reaction from that session hue or session high, as we wish. So that's my points of interest at the moment and my thought process on the DXY. Now looking at this structure point, look at the reaction that we're seeing from it. So that needs to be a sign to you as a trader that my most, or if I say the best structure point that I can see on the chart, by way also supported as a result of a 15-minute order block, that again, arguably it is just placed in the market randomly, but it is there where there's a structure point in the market. So not only would I expect to see price break that to pull back for me to be confident to take a short position from, I'm also seeing a reaction from it which actually confirms that it is a structure point in the market and price is respecting that towards the upside. So something else I need to take into consideration is that after price has made a high on the 15-minute time frame, what am I expecting? I'm expecting a higher low somewhere before expecting a high high. Therefore, when price returns without breaking that area, I need to look for something different, i.e., not be looking to take immediate positions from these session highs or from this 15-minute order block, because we haven't broken structure towards the downside. And in fact, all what price is doing is potentially already creating that higher low to then move towards the high. So what I'll be looking to do is analyze and monitor price action when it gets back up to either the session high or this 15-minute order block, to see then if I get another lower time frame turnaround. Therefore, I'm able to say on write and describe in my journal that although price was moving towards the upside on the 15-minute time frame, I then had a lower time frame shift, a change in character, break of structure, which then allowed me to trade at least alongside a time frame in order for me to take or capitalize on price moving to the downside. What I see many traders doing is understanding that they have these points of interest, but they're executing positions without fully understanding the phase the market is in. The market is still very much so in a push phase, and until, being honest, this 4-hour order block has been broken to the downside by way of bearish 4-hour candle closing below that area, I'm afraid to say it, team, but we do remain bullish on the DXY from this area. So as a result of then this area being the place in the market where I would be looking to take, let's say, a long position on the DXY, that is why my targets would then be down to this area for a short position on the DXY. So I'll bring all of that conclusion to, let's choose a pair, AUG or AU. We'll go with AU today. So of course, AU in converse, we're looking at the lower time frames. We're seeing pretty much exactly the same. We have a hold up on the 4-hour time frame towards the upside. However, it's exactly the same as the DXY, where we're having 4-hour being held towards the upside. However, the DXY isn't there yet. The difference being that AU, we are, in my opinion, bullish. However, we're bullish into a higher time frame point of interest where price is being rejected on the daily time frame by way of the daily 50 EMA. So therefore, my targets are very clear towards the daily 50 MA and any refined area up at those highs. With that said, as a result of price, again, moving towards the downside yesterday without any real form of pullback, I'm now forced to use my discretion and place some structure points in on the chart where I want to see broken before I look for a potential reversal type of position. Now, I say reversal because that will be a reversal based on the lower time frame only. However, the reason that's supporting my long position, of course, so forget about the daily and the weekly just for a moment, look at the 4-hour time frame. We're making very clear higher highs, higher lows, higher highs. We've come back into that higher low area before looking for a reaction. Of course, you can see the caveat already on the 4-hour time frame is by way of the 4-hour 50 EMA. The price is actively rejecting towards the downside. So for me personally, it's something that I've said to those in Frgnt Mastery, that the most desirable position would see a bullish 4-hour candle close above that 4-hour 50 EMA. We then have the confluence that the next 4-hour candle, although it will dip below, will have the confluence that we would dip below and look to reject it towards the upside, and potentially our entry would just be a wick entry as price then moves towards the highs, rejecting the 4-hour 50 EMA towards the upside. So that's the type of analysis that you need to be putting to the test on a daily basis. With that said then, 50-minute price action, what are we doing? Again, as a result of the move yesterday, it's very clear to see that the clear structure point in the market is up at those highs that clearly caused the most recent low in the market on that 15-minute time frame. So again, on the 15-minute time frame, we do indeed remain bearish until we break that key structure point in the market just here. However, in terms of an intraday perspective, as an intraday trader, we want to be looking at price action in terms of what it's doing now, and then understanding, can our higher time frame points of interest support that thought process. So again, using my discretion to place some areas in the market where I want to see broken before being happy and confident enough with that confluence to then take a reversal type of position, although it is supported by the 4-hour time frame. That is what I wish to have, and that is what I see at the moment. What we can see is there's two clear points of interest here on the chart by way of a 15-minute order block, which can I clearly say, as a result of price moving to the highs, that is completely reliant on this 15-minute order block. It's difficult to say, to be quite honest, because we do have this session low in the market that, although if there isn't a 15-minute order block there, if there was there, I would be getting rid of this 15-minute order block and I'd be using the 15-minute order block down at the lows. So it's one to take into careful consideration. And again, when price comes back, it's not the case of taking an immediate long position. It's more of the case to monitor to see what price action is doing on the lower time frames, because you cannot be aggressive in two areas based on two separate points of interest. You then open yourself up to two very easy type of losses. So confirmation and then execution. Another reason why I like that, of course, we filled the gap to the left-hand side. We've had a reaction from that order block that was here on the 15, and we've moved away. So therefore, I'll be expecting, after a high created in the market, I'll be expecting price to pull back to create that higher low before a higher high continuation. So that's what I have on AU using the DXY as confluence. So how is that using the DXY as confluence? Well, if we can see a break on the DXY and a pullback, and then we can anticipate DXY moving towards the downside, we should be expecting AUD USD moving up, pulling back, and expecting a move towards the upside, utilizing DXY weakness. So DXY weakness will, of course, give signs that Aussie dollar is strong against it. So that's what I've got at the moment, team, with DXY, AU, EU, and also GU, much of the same. EU slightly different, where I see EU at the bottom of a range, looking to potentially manipulate a range position, which I do see as very good confluence. As well, you can see these structure points in the marketplace based on my own discretion as a result of price moving to the downside with no clear price action on the way going down. So I have seen some breaks of structure, so I'm looking to utilize the order block that's caused it. But with that said, what do we have at the low? A session low. Therefore, I need to vary my type of entry model, because just what I've said on AU, I cannot be aggressive here and also be aggressive here and open myself up to two very easy potential losses based on aggressive entry criteria. So I'm having to do something different in both scenarios now. And I'm not sure why my alert's gone missing, but I definitely need to have an alert here for me to monitor price action as it comes into that 15-minute order block. And it's much the same on GU, to be honest, but GU doesn't have that the range on the 4 hour and the daily time frame, and to be quite honest, GU is in the middle of nowhere. I put this position here not because I'm taking it. I most certainly will not be taking a long position on GU, because for me GU is in the middle of nowhere. I'm using GU as a confluent to potentially look to take EU or AU long. At the moment, as you can see to the left on the daily, to the left on the 4 hour, there is no reason why I should be looking to refine areas down here to look for a potential trade. So that is going to be my confluence. Let's say if GU is seemingly weaker against the US dollar and GU absolutely obliterates these points of interest, then of course I'm going to not expect these areas to hold either. So I'm run out of time. Thank you very much, everyone. Take care. Charles.